Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Saturday, September 30th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we're diving deep into power shifts and legal maneuvers that are rocking the crypto world. From BRICS' audacious plan to bypass SWIFT, to controversial courtroom tactics in the US, and regulators tightening their grips globally. We'll also explore a couple of high-profile fraud cases that are making the headlines. This is an episode you won't want to miss. BRICS, the international economic alliance challenging Western financial influence, is reportedly crafting its own global payment system, and it's a full-on bypass of the US dollar and the banking industry's go-to, SWIFT. Let's start with the basics. SWIFT is the backbone of global banking. It's the secure messaging system that banks use to send and receive money-related messages. But now here's the thing. SWIFT is primarily owned by banks and has been used as a political weapon. Remember, several Russian banks were banned from SWIFT back in March of 2022 at the behest of the European Union. Now, BRICS isn't just sitting back. According to Russia's finance minister, Anton Siluanov, the alliance is evaluating a unified payments network. They're planning to discuss its potential at the next BRICS meeting. This is a direct challenge to the West's financial hegemony. BRICS recently expanded, adding Saudi Arabia, Iran, Ethiopia, Egypt, Argentina, and the UAE to its ranks. This is becoming something of a formidable alliance. Siluanov stated that the bloc is focused on, quote, removing all ties from the west to the southeast. This trend, he assures, will persist in the future. South Africa's finance minister was candid. A BRICS-based payment system aims to strengthen trade in local currencies, not the US dollar. However, he did note that implementing this would be a challenge, and it's not designed to directly take on SWIFT. But let's read between the lines a little bit here. Any move away from the US dollar in SWIFT is a move toward financial autonomy. BRICS is making moves that could redefine global finance. They're working on their own payment systems, like Russia's SPFS and China's system. They're expanding their alliance, and they're actively working to reduce reliance on the West. Looking at it objectively, it seems that the BRICS nations are tired of playing by the West's rules, and they are taking steps to create their own game. From BRICS to DOJ, we're threading the needle on power shifts and legal dilemmas. While BRICS aims to unshackle from SWIFT, the U.S. justice system grapples with fairness in trials. Next up, we delve into a courtroom drama that's raising eyebrows and questions about the fairness of the U.S. justice system. We're talking about Sam Bankman-Fried, the founder of FTX, and his ongoing battle with the U.S. Department of Justice. First off, the defense team for Bankman-Fried is sounding the alarm. They claim the DOJ's proposed juror questions could taint the jury pool. Attorney Mark Cohen, who is leading the defense, says the government's questions risk presenting the allegations against Bankman-Fried in a prejudicial manner. Specifically, the DOJ omits the word allegedly when describing the crimes he's accused of. And according to Cohen, this improperly suggests that Bankman-Fried's guilt is an established fact. But it doesn't stop there. Other questions are too limited and may not reveal if potential jurors are biased in favor of the prosecutors simply because they're part of the federal government. Or worse, if they've lost money in crypto and blame it on alleged wrongdoings related to FTX or Bankman-Fried. Cohen also objects to question 31. Which asks if potential jurors have ever been stopped or questioned by law enforcement. He says this question is designed to elicit information about encounters with law enforcement that disproportionately affect people of color. It's irrelevant to this case and risks excluding potential jurors based on race. Now, let's not forget that the DOJ has its objections too. They claim that some of Bankman-Fried's proposed questions are unnecessarily intrusive and designed to bias the jury in his favor. The DOJ even opposed questions about pretrial publicity and political donations, calling them unnecessary and time-consuming. Jury selection is set to begin on October 3rd, and the trial starts the next day. Sam has been in detention since August 11th, and U.S. Judge Lewis Kaplan has consistently refused his requests for temporary release to prepare for the trial. Tactics in the courtroom can impact us all, but what if the regulators themselves are on trial? Just as the DOJ's actions raise questions, so does the SEC's approach in its case against Binance. Let's delve into this one next. Paradigm, a crypto venture capital firm, has thrown a wrench into the SEC's ongoing lawsuit against Binance. They filed an amicus brief, accusing the SEC of, quote, circumventing the rulemaking process. The SEC sued Binance in June for multiple alleged violations, including not being registered as an exchange, broker-dealer, or clearing agency. Paradigm argues that the SEC is acting outside its authority. They claim the SEC is leveraging allegations to change the law while bypassing proper channels. This isn't just a legal squabble, it's a challenge to the SEC's very authority. Paradigm points out that the SEC often relies on the Howey Test to determine if transactions are investment contracts. But here's the thing. Paradigm says that many assets, like gold, silver, and fine art, can gain value but are not securities. So why should crypto be any different? As we covered last night, Circle has also chimed in. They raised serious legal questions affecting digital currency and the U.S. economy. Binance has its own stablecoin, Binance USD or BUSD, and the SEC claims it's an unregistered security. If the SEC wins, this could extend U.S. securities laws to all sorts of assets, not just crypto. Paradigm also calls out the SEC for its outdated reliance on the Howey Test. They argue that this 77-year-old legal test does not provide the clarity needed for a diverse crypto industry. Paradigm concludes that the SEC's attempts to enforce crypto regulation through an unreasonable interpretation of investment contracts fail the major question doctrine, requiring clear congressional intervention. If the SEC wins, it could set a precedent that stifles innovation and centralizes power. But if Paradigm's arguments hold, it could force the SEC back to the drawing board, maybe even leading to more sensible, decentralized regulations. Well, Paradigm's throwing down the gauntlet, challenging SEC overreach, but what happens when the regulators, who should protect us, stifle us? Case in point, the Dutch central bank and its grip on crypto. Hang tight, you won't want to miss this. Our next story takes us to the Netherlands, where the De Nederlandsche Bank forced Gemini to halt its operations. This move is a glaring example of how centralized financial authorities are stifling the crypto industry. Gemini announced it would cease its Dutch operations on November 17, 2023. The reason? Regulatory pressures from the DNB. This isn't just a Gemini issue, it's part of a broader trend. Earlier this year, Binance also withdrew from the Dutch market due to similar regulatory constraints. Now, let's talk about the DNB's role here. The Dutch central bank has been imposing stringent requirements on crypto exchanges. These rules are part of the European Union's Markets in Crypto Assets regulation aimed at standardizing crypto regulations across the EU. Gemini isn't bowing out forever, though. The exchange plans to re-enter the Dutch market once it aligns its operations with MiCA. In the meantime, Gemini recommended its Dutch users switch to Bitvalvo, a licensed Dutch crypto exchange. Bitvalvo is registered with the DNB and is a member of the Dutch Association of Bitcoin Companies. So what we're seeing is a clear push towards centralization, masked as regulatory compliance. The Netherlands was amongst the first EU states to enforce the Fifth Anti-Money Laundering Directive. This directive requires virtual asset service providers to gather identifying information about themselves and their customers. The DNB even fined Coinbase $3.6 million in January 2023 for non-compliance. So what's the big picture? The DNB and other central banks are tightening their grip on the crypto industry. They're forcing companies like Gemini to either comply or leave. This is a direct attack on the decentralized ethos of cryptocurrency. It's a power shift, and it's not in our favor. The DNB isn't just content with clamping down on Gemini. They're part of a larger trend squeezing the life out of crypto, a trend that gets darker as we venture into the realm of fraud, where regulators might actually be needed. On to our next tale. The Commodity Future Trading Commission charged Mosaic Exchange and its founder Sean Michael with running a fraudulent digital asset commodity scheme. Mosaic Exchange is a Pennsylvania-based company. Its CEO, Sean Michael, is accused of deceiving at least 17 people in the U.S. and other countries. These individuals handed over hundreds of thousands of dollars in Bitcoin and other funds, believing they were investing in a legitimate trading platform. These funds were misused for personal expenses like restaurant meals and travel. Mosaic didn't just stop at misappropriation. They falsely claimed to have tens of millions in assets under management and boasted of a proprietary trading algorithm with an 82% accuracy rate. They even advertised monthly profit margins ranging from 20 to 60%. All lies according to the CFTC. And if that wasn't enough, Mosaic also claimed to have partnerships with leading crypto exchanges like Binance and BitMEX. No such formal agreements existed. CFTC Commissioner Christian Johnson emphasized the need for stronger regulations in the crypto industry. She cited a report by blockchain analytics firm Chainalysis, which identified scams as the most prevalent form of cryptocurrency-based crime, resulting in over $5.9 billion in losses last year alone. The CFTC is now seeking various remedies, including restitution, disgorgement, civil monetary penalties, and permanent trading and registration bans against Mosaic and its founder. So the CFTC is taking action, but as scams surface, let's take a look at the ongoing JPEX saga in Hong Kong. Don't go anywhere, this one's a doozy. Remember that JPEX scandal that rocked Hong Kong recently? JPEX apparently made some claims that the government of Hong Kong took exception to. The latest development? 4 more arrests, bringing the total to a staggering 18 detentions. And let's not forget, there are still fugitives on the run. The authorities in Hong Kong and Macau has seized over $1.7 million in cash and frozen casino assets. One suspect was even caught destroying documents with paper shredders and bleach. Desperate times call for desperate measures, it seems. JPEX is accused of defrauding over 2,400 users out of approximately $200 million. The Hong Kong Securities and Futures Commission has frozen JPEX's assets due to allegations of unlicensed operation. This shows why strong crypto licensing laws are essential, as Hong Kong leaders John Lee has pointed out. The police also confiscated cash and gold valued at roughly $1.1 million from 3 different apartments. The inquiry has reportedly reached very close to the core of JPEX's operations. Yet the masterminds behind the massive fraud remain elusive. The Hong Kong police are even seeking assistance from Interpol. Now let's talk about the victims. Many investors found their account balances altered or they couldn't withdraw money. JPEX halted trading and blamed a third-party market maker for maliciously freezing funds. In the wake of the scandal, the Hong Kong financial regulator plans to reveal a list of firms that have filed for retail crypto trading licenses. They will also disclose a list of suspicious crypto trading platforms. The question is, can we trust these regulators who've shown time and again their eagerness to clamp down on financial freedom? So what happened? BRICS is expanding and formulating a strategy to bypass the SWIFT system, challenging the West's financial hegemony. The U.S. Department of Justice is facing criticism for its juror questions in its case against FTX's Sam Bankman-Fried. Paradigm has laid bare the SEC's overreach in its lawsuit against Binance, demanding accountability. Across the pond, the Dutch central bank has shut down Gemini's operations in the Netherlands, pressuring the crypto industry to toe the regulatory line. The CFTC charged Mosaic Exchange for running a fraudulent scheme, calling for stronger regulations. And finally, the JPEX scandal in Hong Kong continues to unravel with more arrests and asset seizures, highlighting the dubious role of regulators. The overarching theme tonight is the intense power struggle between centralized authorities and the decentralized world of crypto. Whether it's BRICS' ambitious plans to create their own global payment system, the U.S. government's questionable legal tactics, or international regulators stifling innovation, these stories are redrawing the lines of financial power. These shifts define who controls the financial systems, how fair the legal processes are, and whether the crypto space can truly remain a realm of financial freedom. These are not isolated incidents. They're pieces of a bigger puzzle. From BRICS' challenge to the West, to the U.S. legal system's treatment of crypto entrepreneurs and the increasing regulatory clampdown worldwide, each story adds to a complex tapestry that will shape the future of digital assets. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.